Alright, let's do a post on some weekly charts. Let's map up some weekly charts starting with the S&P, E-Mini weekly, then we'll look at some stocks and see where we go from there. Now, as crazy as things get, we do need a very simple, objective way to map markets. When markets fall like this, when everything's heightened, we tend not to see things very clearly, and so we want to fall back on very simple, grounded methods that show us what is. Now, I'm not predicting. Trader's job isn't to predict, it is to follow and join what's there. So the first thing we want to do is have the ability to see what's there beyond all the crazy. And it doesn't matter if I'm day trading in normal times or I'm mapping these charts, it's the same thing, swing, swing. So as you know, we're just going to map some swings, largest reaction leg in your frame. This is your frame. If you want, you can make this your frame and follow that. This is my frame here. It's going to be my major swing, and the next largest, a swing is a swing is a swing. That'll be my next largest. And I'll see, okay, we're not pushing the minors anymore. And this is pretty normal for markets to just crank up and pull back like this. And this is where median lines come in. And so we're gauging this pullback. Again, I'm not predicting. This is what it's doing until it's not doing this. Now, if you practice once in a while with this and you start to learn to understand the swings and the lines, quite often price will even carve out a bigger swing, doubling it out. So there's two areas I'm basically looking at. Right in here, right in here. Again, no predictions. No reason to catch a falling knife. And by the way, in this volatility, unless you have to be trading, you really shouldn't be trading right now. Things will slow down a little bit, but there's a lot of learning to take place. So no matter what's going on, this was the 2009 crisis, we have a way to map. Now let's go look at some stocks. So I have a few stocks on my radar. One of them is VRTX weekly. I believe this is a biotech. Again, we're just going to map. And this is how I trade, whether I'm doing a 20-minute trade or not. This is how I want to start. So I want to see. All right, that falls about there. And then my minor swings, you can see where we've been making minor swings along like this. Now all I'm going to do is very simple. Right? I'm going to look what sticks out, supply demand wise. So I'm looking at swings, I'm looking at gaps. So this is something I'll be looking at in this weekly VRTX stock. So it's not that I want to only buy anything. Things change. I'm willing to sell and go the other way. Same thing with the S&P. I'm willing to go in here and sell if need be. Actually, we can start to look about where a swing might start. It's going to start from either here or here. So any pullback is liable to take us to this neighborhood. Alright, so back to stocks. Alright, next on my list, let's come over here. We could look at Gilead. This is one I'm watching here. He's made a lot of tiny swings. Now we broke, and now we're making swings this way. So what I'm really watching in here is we've made a swing like this, swing like this. We've just gapped. It's probably one of the few stocks that's up this month. And it'd be interesting to watch if we beat this area. AVGO is what I'm looking at. And this is another case. You'll see when markets, here's like a mini version of this. See, when markets go and they're swinging you know, these little swings. They're tiny, little pullbacks, little pushing, little momentum, and then they grow up to be a bigger swing. Well, that can happen here as well, so I'm going to be watching. And a median line is what begins to capture this. So we see we've beaten this pullback, and we're here like this. Gap wise, you see, just look where it got thin, and we call this a press in here because it presses and then expands. It's actually kind of like this in here. So I'm watching AVGO, and let's come over here and look at everybody's favorite, Apple. I'm just going to simply map. I'm not predicting, I'm just mapping. Gotta get a handle on this. I got a swing, I got a swing, I got a swing. Prices now looks like it's pulling back right to it. I've got really nothing to hang my hat on here, to lean on. See, this is all thin. There's one lotters here. You know, I don't expect these guys to defend this position. As I'm looking at Apple, this is going to be my version of value investing, and it's just reading price. So I'm looking at the last time Apple got really upset, and who knows what was happening here. Somebody picks it up here, and you can see it's actually up against this press. Somebody picks it up here and holds it. Somebody picks it up here and holds it. Somebody picks it up here and holds it. So this would be a place I would think I'd be happy to buy some Apple. And if I look, it's liable to be doubling these swings out. Boom, boom. So this is my Apple chart. So basically what I want is a bargain, right? I want it to really come unglued, and that's unglued for Apple. I want a bargain in here. All right, so I've got a few others I'm looking at. Let's look at where is it? Squarespace. Same thing, little swings, little swings, little swings. It actually hasn't really done much, and then tried, and we're making a swing down. What I like about SQ is the press, and it's just a piece of structure. It doesn't mean it holds, doesn't mean it doesn't hold, but it's a place where you identify something that happens over and over, which is, see these swings, same size swings, pull back into each other and then expand. It's like this, boom, boom, nice and organized, and then expand. It's in the gap family. So this is like where the gap takes off. And if I keep drawing and I follow this swing down, so this is something I'm looking at in Squarespace. All right, one more. We have to include one of the old time piggies here, Bank of America, one of the banks. And this is mostly about being able to look at a chart, map it with simple swings, simple gaps. We have other things, but that's simple, right? We can see this is all gap. We can see price came up here, bounced off this gap. We can watch the swings as they're rolling. Swing, swing, swing. I generally will draw off of this V, put a modified shift in here and take it to the top. And we can even get fancy here and capture this slop like so. And we're falling down into this area. Now there's no big hurry to get the touch, and price is liable to bounce around, give some sort of an indication of a turn. I mean, even here, right, we can see via swings this price came down here. You can follow the swings. It gives some sort of So this is the kind of thing you might want to look for entries with in any of these zones. This kind of, it's just using swings the same way we're using swings here. It's just in a smaller fashion for an entry. So as price comes down here, it says, hey, we've taken those guys out, we've turned up, at least for now the way is up, we've swapped here. And one more chart, since it's such a pretty chart, is the weekly CAD. Alright, so making little swings, and just stops dead and turns, actually starts to make a lower swing. And this particular median line is what captures when a swing does not continue down. So just because the swings are down doesn't mean it has to. Our job as traders is to, and you're perfectly sane to go ahead and sell this, but when you see it beats it, well, then you switch and you go the other way. On a weekly chart it takes longer, but you'll see this kind of median line is what captures this. I call it the try because the swing is trying, and now it's reaching for the upper parallel here, so that's its stretch. So this has been a very pretty chart. It turned. Kind of hard to predict it was going to turn up. I've been watching this for a while, not sure, but I'm not a predictor, and so if I'm wrong, I learn from that. It's that simple. When you're wrong, you learn. You're going to be wrong a lot, so when you're wrong, you learn. Be willing to change with change. That's what a trader does. That's what I aspire to. I don't always do it, but that's what I work on. Alright, one more last word on this kind of volatility. If you don't have to trade, it's not a good idea to be trading right now. Anything can happen. You see the market's going limit down, but one thing is you don't want to get trapped in a position, and it's best to avoid that kind of a thing ahead of time. Markets will return to decent volatility, so that's just something to consider. All right, thank you.